All right, Dom, stick with us here as we turn our focus specifically to Rhode Island State Pension Fund. The fund ranks in the top 5th of public pension funds in the nation, and its outperformance comes despite a 12% unemployment rate for the state of Rhode Island. Kenneth Goodreau is the Chief Investment Officer of the more than $7 billion state pension fund. He joins us now from our Boston bureau. Ken, great to see you. So you guys, your fund is up about 13.6% for the year ending June 30th. What changes did you make to boost the fund's performance?
Yeah, I think what's fascinating about what we've been trying to accomplish in Rhode Island is really trying to keep it simple and focusing on asset allocation and exposure management and risk management. And I think that the changes we made in the last 3 years, focusing on risk and making sure our exposures were correct, is really what's been kind of grinding us to much better performance. So
what are some of the asset allocation changes you made?
Well, I'll tell you, even going back to 2007, and once again, not foreseeing what was going to happen in 2008, we just weren't getting paid for risk and credit. So we've done some things like dramatically reduce credit then. That was a tactical decision. But I think if you look over the last 2 years, I think what I would almost say is we're more of a beta tilt portfolio. We're really focusing on tilting our exposures higher when we think the risks warrant them, and tilting our exposures lower when we think risk is in the markets are getting complacent.
Now, Ken, it's Dominic here. Really quick, you talk about this beta tilt.
How are you, Dominic?
I'm doing great, thank you. This beta tilt where you kind of add or take off exposure to kind of match the market, so to speak, right? Here's the thing. How do alternative investments, things like hedge fund investments, private equity, those actually hurt a lot of funds early on in the cycle here, but maybe adding alpha or excess performance going forward? Is there a balance to be struck here between what pension funds have to do to meet these obligations?
Yes, and I think there is, and we're not there yet because I think you got to build the structure of the house first, and I think we stripped out a lot of what looked like alpha-generating things, but it was really closet indexing with very expensive market impact costs, etc. So we saved about $20 million last year just in fee reduction. We've also reduced our standard deviation. I do think there's a place for hedge funds, but if you look right now, and we are exploring that, but I think if you look right now, the correlations to the market right now are the highest we've seen since 1987. So this really is about the stock market, not a market of stocks. So I think at some point, I think global macro funds may play a mix in what we're looking to do, but I really think that's kind of the next step. Right now, we're looking for efficiencies, and it's working.
All right, so the liabilities in your $7 billion pension fund, Ken, are only about 70% funded. So can this tilt, this beta tilt as you're describing, make up the difference to get 100% funded?
Well, I'll tell you this right now. I think structurally across the country, I think the performance has never been the problem. It's a structural problem. But let's just say that it wasn't. The biggest problem that we have is we pay out a liability every month. So it's almost like what I refer to with my board as like a negative dollar cost averaging. So what you really have to do is manage cash. That's something else we do that just started in 2007. And I got to tell you, if you go back to 2007, when the world was all correct, managing cash wasn't a very popular thing to do. But you really need to be managing. If you have a liability, you have to manage cash. And we didn't have any forced liquidations in 2008, nor were we even close because of the way we tactically and aggressively manage cash.
Speaking of liabilities, obviously the BP oil spill has been so prominent in our news coverage, and everyone's concerned. What is Rhode Island's exposure to BP, and what are you doing with that?
We have absolutely minimum exposure. If there was any at all, it was index related. So, unfortunate things happen in equities, and there's always going to be outlier events. But to be honest with you, I'm not looking for trying to get too granular with this account. This is really, most of the issues are very top down and much, much bigger than a BP issue, unfortunately.
Indeed. All right. Ken Goodreau is the Chief Investment Officer of the Rhode Island State Pension Fund. Many thanks for your time.